So, as virtually all XRP holders around the world are holding their breath, wondering what is about to happen next for the spot Bitcoin ETF applications leading into the deadline by January 10th, Matrixport analyst Marcus Thielen said the Securities and Exchange Commission will likely reject all spot Bitcoin ETF proposals this month. And he argued the applications are still falling short of critical requirements that must be met before the SEC can approve them. So interestingly enough, when that news broke from a company that virtually nobody's heard of, Matrixport, who knows who they are? Well, hundreds of millions of dollars were wiped off the table and liquidated from leverage long traders so the exchanges can pave the trail to make more money. So whether you want to call this an orchestrated event where they put in some phone calls, they tell this company to put out the news, and at the same time they're selling, so people think that it's this news that broke, when in reality it was to liquidate the longs so the exchanges can make more money. Well, Grayscale is officially listing their GBTC on the retail-facing website. Now, legally, this is only possible if approved. And so, could there be some news that's happening behind the scenes right now with people chattering and whispering about the ETFs being approved? And this was the shakeout event before we see the SEC approve one or multiple ETFs over the next week. So we're going to be talking about that in this video. We're getting into the Bitcoin price chart, showing you guys key critical indicators on what to look for on the charts. What would happen if the SEC denied the ETFs according to lawyer James Murphy, where we are in this macro market cycle, and also some top altcoins to keep on your watch list that we believe are going to perform very, very well leading into 2025. So if you're feeling bullish, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by taking your putter, grabbing that like button, and just tap it in. Give it a tippity taparoo, sink the putt. We're doing it for grandma. We're beating the SEC, and we're buying our house back with XRP. Let's run it. All right, bull runners, welcome back to the channel. So the total market cap of the whole industry is at $1.68 trillion. It's up 3.88% over the past 24 hours. Bitcoin is back above $44,700. Solana's back at 106 bucks. XRP just shy of 60 cents right now. Avalanche at 38 cents. So Bitcoin bounced back, and the rest of the altcoin market is trailing behind. So let's dive into what's happening on the price chart, and then let's get into some news as well too on what's happening with the ETFs. And so looking at Bitcoin to the US dollar on the daily candles right here, we can see in the open interest suite in the aggregated of leverage traders, we saw this liquidation event bringing the leverage below this upward trending support line right here. Now we've seen this happen several times in the past, all through 2023 during phase one of this bull run. We can see as the leverage increases, we've seen these liquidation events take place for these mass orchestrated sell-offs where the price of Bitcoin dipped down from $25,000 all the way down to $19,000 and then just fly right on out of here, and the leverage continued to build up. We saw another liquidation event down here when the leverage was at $3.8 billion. It goes down to 2.8, fakes everybody out, liquidates a lot of the people that are longing the markets right here, and then that gets bought up relatively quick. And then we've seen this happen time and time again. In August of 2023, saw another liquidation event for one final, fall off a shelf for leverage longs. And this was the biggest liquidation event, all year, where the leverage went from like 3.9, even all the way upwards of 4.2 billion, all the way down below, $3 billion down here. And then we start building up momentum again. So this arguably could be a fake out event to liquidate the longs as we push back up above this upward trending support and back above $4 billion in leverage. So I do want to err you on the side of caution, as I have in the past few videos, because if we see Bitcoin break this upward trending resistance and we see Bitcoin fly upwards of $48,000 or $50,000, potentially even $55,000 or $60,000 to retest the top of this dead cat bounce or even the all-time high, you want to make sure you're subscribed to this channel and watching these videos, because I'm going to be showing you guys where the leverage is at this point as we get into drastically overbought territory on multiple indicators. So when we look on the macro on the weekly chart, when would be a good point to sell? Now, as always, don't buy, don't sell anything we talk about on our channel. I'm going to give you guys the information, the education, and then what you choose to do is up to you. This is never financial advice, but I do want to show you what's happening on another indicator, such as the moving average convergence divergence, or the MACD, and when it is proven to be a good time to consider exiting the markets, because when we see the MACD line in blue down here on the bottom of the screen cross below the signal line, that has signaled that the top has been in for an extended rally, depending on how long the rally went for. And then we've seen bearish price action and the momentum shift where the signal line has been above the MACD line, and then we see a sell-off to the downside. So I've circled on the chart each time that has happened in the past compared to where we are right now. The MACD line is still above the signal line. We have not seen a cross on the weekly, but the last couple times that this happened, the first time was during the first high of April of 2021. The next time was after the second high in November of 2021. As you guys can see, there was this descending resistance where we were seeing the MACD trend downwards, but we were seeing the price chart make a higher high, which signaled that the bull run was over. And if you were considering hedging your portfolio during the last bull run, this is what you want to look for. You want to look for the MACD line in blue crossing below the signal line. And this happened when Bitcoin was at roughly, $57,000. The time after that, Bitcoin was at roughly $58,000. So you'll never be able to catch the top every single time. Sure, there is that one person out there randomly that will brag about it for 4 years on how they sold the exact top for Bitcoin or XRP and they bought the exact bottom for it, but you're most likely not going to be that person. The money is made in the middle, and the money is made 70 to 80 to 90% of the way up. You don't have to catch the exact top to make money, because if you're buying relative to the bottom and you're selling relative to the top based on these indicators, it will give you a better understanding based on what I'm sharing with you right now on when the best time to enter the markets or exit the markets would be. So if you're considering selling right now, consider this. Let's look back to the last bull run. Let's see what happened. So the all-time high of 2017 was all the way up here of nearly $20,000. As you guys can see, the MACD line in blue was drastically above the signal line in orange, and we got all the way upwards of 3,200. Once we saw a cross take place, we saw Bitcoin falling off of the shelf, and Bitcoin was at roughly $12,000. So even if you didn't catch the top at $19,000 and you were selling on the other side of the way down, well, that would have been equivalent to selling right about here on the way up. So you didn't really miss out on, too much potential the upside because you caught it on the way down. Now in 2019, arguably the first fake out rally of that bull run before we went into the black swan event of COVID, we saw the same thing happen as 2021, where we saw lower highs on the MACD, but on this time, instead of seeing a higher high on the price chart, we are seeing a lower high on the price chart. And so this would have been a great time to consider hedging your portfolio as the MACD line crossed below the signal line. Bitcoin's price was around $10,000 and we dropped all the way down to $3,000. So you could have hedged your portfolio here. And then on the opposite side, when you want to enter the markets right here would be when the MACD line is below the signal line and we see a cross below zero, drastically below zero. So the further below zero on the histogram, the more bullish the signal, the better the entry point. The further above zero that we see a cross where the signal line crosses below, the MACD line crosses below the signal line, then that would be the best time to sell. So arguably this would be the best time to enter the markets. And sure enough, where was Bitcoin? It wasn't quite at the low, but it was at $3,300 all the way down here. Now during COVID, where were we right here? We were just bouncing out of COVID down at the bottom here, and Bitcoin's price was at about $6,000. So sure, some people caught the bottom for the flash crash down to 3,800 all the way to 5,400. So smart people were buying right here while we were on the way down. But when the MACD line crossed above the signal line, that was indicating that we were going back into the bull run. We're going back into bullish momentum. Now let's see if this would confirm itself going back to the bull run before then and what that looked like on the MACD. And so at the all-time high during the previous bull run, when we saw a cross, we were all the way up here at about 174. The MACD line crossed below the signal line in orange, blue crossing below orange, and the price for Bitcoin was at about $753, almost at the peak. Then we saw this dead cat bounce. The price right here was at $590, and then Bitcoin dropped all the way down to $150. So arguably, this is one of the main indicators that you want to be looking at, along with a few others that I'm going to share with you in this video on the best times to buy and the best times to sell based on this. Now, when did we see the MACD line cross above the signal line in orange to signal a reversal right here? Well, that was when Bitcoin was at about $240. So sure, if you missed Bitcoin down here at $150, if you bought at $240, you would have had to be patient riding this out and then seeing, this final capitulation event down to $195. And you would have, let's say if you bought right here, you would be down on your portfolio about 17% 200 days later. But in the grand scale of things, when in doubt, if you zoom out, if that was your entry point and you were to hold during the entire bull run and you bought Bitcoin at $235 and then you sold at the almost the peak when the signal line crossed below, the MACD line crossed below the signal line, you would have been up 5,300% on your portfolio. So if you look at this is one of the best indicators to be able to watch long term if you don't plan on day trading in these markets. So obviously, best time to buy is well below zero on the histogram when the MACD just crosses above the signal line, blue line crosses above orange. We were almost at the bottom right here. That was also where the pi cycle bottom was indicating that the bottom was in for Bitcoin. So at about $18,000, even though Bitcoin still went to $15,000, it's still close to the bottom. So it's still a great entry point for Bitcoin, even if you waited for that final crash event. And when would the best time to sell? Well, we're not quite there yet. As you guys can see, the MACD line is still above the signal line. We haven't seen a cross yet, and we're not quite all the way overextended to where we were all the way back here in 2021. So we're just heating up in this bull run. Now, I do believe there's going to be a correction coming soon, but I do think we're going to be pushing higher leading into these ETFs. And where that will push us, is anyone's guess. A lot of people saying the ETF is not priced in, the ETF's approval is not priced in yet, and about 85% of institutional money has yet to even enter into the markets. But part of that is priced in based on the rumors. And so looking at Bitcoin to the US dollar on the monthly, the further out we zoom on the price chart, meaning when you look up here in the upper left, if we're on the daily, the 2-day, the 3-day, the 12-day, the further out we go to the 1 month, 3 months, 6 months, and 12 months, and the stronger the signal will be based on these indicators. So if we're looking at the RSI right here, anytime we are above 90 to 100 on the monthly on the RSI, well, sell, seriously sell. We are overextended. We are in euphoria. We are in the top, basically. That's signaling that the markets can't go up much further from there based on the past bull run cycles. And sure enough, when we've been up here, Bitcoin was all the way upwards of $261 at this peak, over $1,000 at this peak, almost at 20 grand at this peak. At this peak right here, we were upwards of $50,000 right here. And then on the all-time high, it's funny because we were making a lower high on the monthly. And so we were seeing this divergence right here, signaling that the bull run was over. So right now, where are we? Well, we're at 63. And so you can see where it says potential correction right here on the screen. And the reason why I say that is based on what I talked about in the last video, where in 2019, we breached right around this area before we saw a correction. And during the last bull run, we did the same thing before Bitcoin's halving. We went upwards of $773 right here, and then we corrected down about 37, almost 40%. And so because we're at 63, we're not quite upwards of 67 to 70 yet. We have one final, in my opinion, I could be wrong here, right? Let me know if you agree by liking this video. If you appreciate this type of information, if you disagree, let me know why in the comments below. But I do believe we have a little bit further to push in the short term. And then we see a crash going into Bitcoin's having in a correction and bringing the RSI back down closer to 50 through 2024 in March when the Fed starts cutting interest rates, and then we work our way out of here going into 2025. And I have some other important data to share with you guys towards the end of this video on why I believe that will happen. Now, looking at the market cap dominance for Bitcoin, this is an important chart because this shows us what percentage of the total market cap is held in Bitcoin. And also when we look at the stochastic RSI on where we are, we're sitting at 24. We're all the way down here. So a few things could happen with Bitcoin's dominance leading into the ETF approval. Number one is if one or multiple ETFs are approved by the SEC, I would expect Bitcoin's dominance to surge and for Bitcoin to see a rally upwards of 48 to $60,000 between there, and for Bitcoin's dominance to push upwards of roughly 57, 58% to this descending resistance, and then for us to see a correction after that. I also would expect the stochastic RSI to come up above 50, potentially even all the way of 79, 80, or even 90, all the way up here, and then for us to see a correction on the other side because we are in oversold conditions with Bitcoin's dominance with that flash crash that just took place. Now, if the SEC delays the spot Bitcoin ETFs, we could see Bitcoin's dominance roll over, break this upward trending support, and see a sell off to the downside as money flows out of Bitcoin. Money would even flow out of altcoins, but it would flow faster out of Bitcoin into stable coins like USDT or USDC. But eventually Bitcoin's dominance will top out and we will see an altcoin rally like we've never seen before. And when that happens, the crypto total market cap excluding Bitcoin, I believe, will surge. Now, we did see a back test of this resistance, and that could signal that, hey, the retest is done, because usually when we see a breakout this rapid from a range that we were consolidating in for a long period of time, we see a back test before a continuation to the upside. And this wick could be that back test. Sure, we could come down further in the short term, but eventually I do think we're going to work out of here and we're going to retest this previous range as resistance, which was support before this whole dead cat bounce took place, to retest the 200 moving average that you can see right here in red. And so that would roughly be around $935 billion to $1 trillion, potentially all the way to the top of the dead cat bounce at $1.25 trillion. But I do think this would be the zone to watch for before we see a much deeper macro correction and consolidation through 2024, leading to what the Federal Reserve decides to do in March. Because if you guys watched my video yesterday, I talked about how in March they're planning on lowering interest rates. Then for the rest of 2024, they're planning on lowering interest rates. So I think that volatility will come into the markets, and we will see an extended period of consolidation for Bitcoin and for the rest of the altcoin market cap. Now, one thing that's interesting is looking at XRP's price chart. XRP came all the way down to 50 cents to retest and wick off of this upward trending support line right here that it has held all the way since like June of 2022. So the pressure is building for XRP, and looking all the way back to 2015 to 2017, we saw XRP break below this upward trending support line right here, have one final shakeout event, this massive wick to the downside to 0.003, and then XRP just to kind of consolidate here for an extended period of time before blasting off. So could we see something like this happen for XRP? If the ETFs are denied, well, then that wouldn't be good news for the rest of the whole markets, as we would see XRP sell off, potentially break below this upward trending support, find a low for 2024, and then work our way out of here going into 2025. So it would be very trippy if we were to see something like this happen. ETFs get denied. You guys saw what happened with the FUD that was spread about Bitcoin. Well, what did this have to do with XRP? This had absolutely nothing to do with XRP. It was Bitcoin spot ETF that could potentially be denied by the SEC, but yet XRP drops, all the way down to 50 cents. So when people watch my videos and they say, stop talking about Bitcoin, I want to hear about XRP. Well, when something happens to Bitcoin and then XRP sees a sell-off to 50 cents and it drops over 20% because of news that happens to Bitcoin, we need to be paying attention to Bitcoin every single day, because if the ETFs are delayed or denied, I would expect XRP to come all the way back down to, 35, 40 cents, all the way down here, find a low. And I personally will be backing up the truck and buying as much XRP as I possibly can, because similar thing happened back in 2017. And we have a funny way of forgetting the past, having a short attention span, and losing track of emotions of what it felt like down here back in 2017. Bitcoin was rallying, XRP was seeing a sell-off. So this time around, could it be that, hey, if the ETFs are denied, Bitcoin sees a sell-off, XRP sees a sell-off, the rest of the market sees a sell-off, people go into stable coins, and then that's the biggest fake out, because eventually the SEC would approve them later. So in the long term, when in doubt, zoom out. Time in the markets always beats time in the markets. But if the Bitcoin ETF is approved, hey, we could break out of here sooner than a lot of people expect, and we could retest the highs of 2023 and then even go upwards of $1.30 relatively fast for XRP before seeing a much macro sell-off and a consolidation period through 2024. So regardless of whatever happens in the short term, guys, for XRP, I am super bullish long term, as I've said in previous videos, but I do want to talk about some other projects that I am bullish on, because I do think XRP is going to take a little bit longer than people expect to break out. It could take all the way to 2025, because the lawsuit, up until April of this year still has several things to work out with the SEC, and then Ripple has to pay, a certain dollar amount that they decide on. Now, looking at the crypto total market cap in terms of, a retracement back up, well, a 50% retracement would be at $1.87 billion, including Bitcoin. So if we see the ETFs approved, I think we would fly right to a 50% retracement really quickly. We could potentially go upwards of a 618, a 782, or a 786 within this range right here, and see a blow off top. and then we see the markets come down and correct for an extended period of time in 2024. And so we will be looking at the indicators. I'll be showing you guys what's happening on the charts right now. So we're kind of in this middle ground right now where, if they get denied, we're just going to roll over and see a big sell off to the downside, potentially come back down to retest the $1.25 trillion resistance as support, and then work our way out of here for 2024. And so if we see this happen and this bull run for 2024 is cut short because the SEC can't make up their mind and they say they need more time or they deny them, well, eventually the ETFs will be approved. And so I'm just going to be holding throughout that. Now, one thing that's interesting to note is the DXY, because the dollar, in the basket compared to other currencies, well, the dollar moves inversely to crypto. As you guys can see, when crypto started rallying in 2023 in September, the dollar saw this sell-off and the DXY went all the way down to 100. Now that crypto has seen the shakeout event, well, the dollar has pushed up. And so we see this descending resistance where this dotted yellow line is right here on the DXY. If we break above this on the dollar, we could push all the way up to 104 and we could see crypto roll off to the downside. Now, one thing I would expect is one final capitulation event for the DXY closer to 30 down here, and for crypto to rally up into the ETFs on January 10th. And when we see the DXY down on 30, then I would expect the dollar to reverse, because this would be some sort of like falling wedge pattern that we'd be looking at right here on the price chart for the dollar, for it to come back upwards of 50 and the dollar to bounce off of 99 or 100, break this descending resistance, hold it as support, and then push up, leading into Bitcoin's halving. This is what I would expect to happen for the dollar. Now, if ETFs are denied, well, hey, I would expect the dollar, people to run to stablecoins and the dollar a lot sooner, and for us to push up here faster. And so either way, at some point, the dollar is going to be bouncing. But Grayscale and Van Eck have filed a registration of securities with the U.S. Securities and Exchange Commission for their spot Bitcoin ETF. Registration is a crucial part of the application process, and Fidelity recently submitted the same filing this week as they also prepare their application to be approved, before next week's deadline, or denied. And both firms represent one of the more than dozen applicants the SEC is considering. However, this development does not increase the odds of approval from the agency, and it's still in question right now. So if you can't handle the risk, then you shouldn't be investing more than you can afford to lose. But according to lawyer James Murphy, if the SEC were to deny all spot Bitcoin ETFs, the applicants would immediately sue the DC Court of Appeals and would rule that the SEC was arbitrary and capricious, he's saying. And so either way, the SEC's hands are going to be forced into approving these at some point or another. So if they delay or they deny, that could be the final shakeout event. Before then, they're forced to approve it. And then people that are buying the dip are going to get the best entry point before we blast off, into the first phase of the bull. Because you see the bear market is roughly a year from top to bottom. That's what we saw in 2011, 2014, 2018, 2022. The pre-bull is 2012, 2015, 2019, 2023. The first phase of the bull run, 2024. And in 2012, we just shot up because the market cap was so low. 2016 was a little bit more volatile. As you guys can see, that period where Bitcoin rallied before the halving, then saw a sell-off into the halving. In 2020 was the most volatile, with that 2019 DeFi summer. Then we saw COVID happen. Then we worked our way out of there as they printed more money than ever before. So 2014 might be a hybrid between 2016 and 2020, and even maybe 2012 with this ETF news. So I expect some major volatility because the Federal Reserve is going to be cutting interest rates. But then on the other side of the scale, we have Bitcoin's halving, which is drastically going to decrease the amount of Bitcoin that is being mined and rewarded for miners. And then we also have not only that, but the ETF news. But on the other side, we have potential macroeconomic disaster, recession, Fed cutting rates, some housing market crash, some sort of crash in the economy, some sort of crash in the markets that's long overdue. And so those are the two sides. So that's where there's going to be insane volatility coming up. But nonetheless, 2025 for the second phase of the bull. 2013, we went absolutely parabolic. 2017, we went absolutely parabolic. 2021, we went absolutely parabolic. Regardless of the dip after the first peak, we still went up for the second peak. 2025, we're expecting the same thing. And the reason why is because the dollar keeps losing spending power. So why would someone want to be in the dollar long term when crypto is that asset class that is the next stock market? Now, looking at these altcoins that we're extremely bullish on, and what we're looking at on the chart right now, one of them being Chainlink, we can see on the stochastic RSI, we're down here all the way below 16. We're actually at 10 right now. And so anytime we've been down here before have been great entry points for Chainlink. Now, I'm not telling you to buy Chainlink, or I'm not going to tell you to sell Chainlink. I'm just showing you what the stochastic RSI is showing me. So when we were back here, August of 2023, Chainlink went from $5.80 upwards of $8. The time before then, we were all the way down here on the stochastic RSI. We were all the way down at $4.88 for Chainlink. It went upwards of $8. The time before then, we were at $5.90. Chainlink went up to $8.80. The time before then, we were at $5.30. Chainlink went upwards of $8. The time before then, we were at $5.50. Chainlink went upwards of $7.70. The time before then, we were down here at $5.20, and then Chainlink went up to $9.50. So now that we're down here, where's Chainlink going to go next? Well, I think Chainlink is going to come somewhere up here to retest these previous peaks, maybe $28, maybe $37, somewhere around here. So I would expect Chainlink to break out relatively soon with this news. See a blow off top for before Bitcoin's having $25, maybe $35, somewhere up here, and then to see a deeper correction going into Bitcoin's halving. This is what I expect for Chainlink. So Chainlink, you can't go wrong. Great project, the king of oracles, and it's going to do very well. Now, another project that hasn't really had a bull run for 2021 because it's new, but it's GMX. So perpetual trading, guys, decentralized exchanges, going to do very, very well. And GMX is one of the leading projects that a lot of people are talking about. Now, GMX just broke this descending resistance right here. Now, I do want to err you guys on the side of caution because on the stochastic RSI, we are up here almost into overbought territory. But because we just broke this descending resistance right here, if we hold this as support, the next stop for GMX, I believe, would be all the way up here to retest, close to the all-time high of this range right here, roughly between 70 some bucks and $80 right around here before we see a much deeper correction for GMX. So definitely keep GMX on your radar. Another one is Casper, CSPR. Casper is forming a double bottom trend reversal. You can see bottom number 1 back here in June of 2022. You can see bottom number 2 back here in October of 2023. We're coming back up to the neckline. And so if we push above the neckline for Casper and we hold it as support, I would expect the next stop for this wave 1 in the L8 waves to be upwards of 10 cents to 13 cents for Casper to retest this high right here before we fell off a shelf back in April. And also we consolidated here and kind of remained range bound right here for an extended period of time back in 2021 to 2022. So I'd expect this to be a peak for Casper, then for us to come back down and find a new low going into Bitcoin's halving. Now, HBAR is another project. Now, HBAR just broke out of the symmetrical triangle and it's coming back up to test the resistance from February of 2023. So if the ETFs get approved, this is going to affect all altcoins, guys. So really, we just need to keep watching the news for Bitcoin. Subscribe to the channel. Stay plugged in because we'll keep you updated on the community section as well too, and in our Telegram group in the description below. But if HBAR pushes up above this neckline, holds it as support, the next stop for HBAR is all the way back up to where this support was back in 2021 and even back before the FTX collapse, all the way back here in like March before we fell off the shelf. And so that's all the way between 15 cents to 20 cents for HBAR. We're sitting at just shy of 9 cents right now. So I could see a big move happening for HBAR and then a consolidation period and working our way through here in 2024. Depending on what the Federal Reserve does with interest rates will determine how deep the correction will be. Now, obviously, if the ETFs are denied, we just come all the way back down here to retest this upward trending support at about 5 cents. And that's what I'm going to be backing up the truck for HBAR. Now, another project to look for is Near Protocol. Near Protocol has been crushing it. During the last bull run, it did very, very well. The market cap was upwards of $12 billion. It's in at $4 billion, so this is a large cap, but the price was all the way up at $20. It's just shy of $4 right now. So Near Protocol is going to do very, very well this bull run. And looking at the chart for Near Protocol, it just broke out from this resistance right here. It back tested it with that FUD that was spread from Matrix Port about the ETF denial, coming back down to $2.80. That was bought up really quick. The next stop for Near Protocol is all the way upwards of $6 to $6.90 to retest this resistance back here in August of 2022. Support right here, support right here. And so this is going to be the next stop for Near Protocol before we cool off for a little bit. And so I would expect that to happen relatively fast if we see good news. Now, comparing Near Protocol to something like Celestia, a lot of people are getting into TIA right now at $15.63. This project just ate up that dip, and over the past 7 days, it's up 31%. Over the past day, it's up 24%. So I do want to err you guys on the side of caution with projects like this because, yes, they could push up higher because it's in price discovery. When a project goes into price discovery like this and it hasn't had a prior bull run, it's anyone's guess on how high it could go. But what we're forming here is wave number 1 in the macro Elliott wave. So for me, I'm not buying this project right now, even though I think wave number 1 could push higher. You know, we could push upwards of 30 bucks, 45 bucks. It's anyone's guess. It's kind of like what happened with Bonk. You know, eventually this will turn around and we'll see corrective wave number 2 come in before we see impulsive wave number 3. Now, depending on how this chart looks, because if I trace up compared to Near Protocol, it looks something like this, where TIA is doing what we saw with Near Protocol for the first rally that was taking place for that first phase of the bull run, where, you know, we could be anywhere on the upside of this. Hey, we could be right here, we could be right here, we could be right here for Celestia. Nobody knows, right? And so because you don't know, the best time that you enter into projects like this from a strategic perspective and from a dollar cost averaging strategy is you wait for corrective waves for wave number 2, because when we pull up the RSI on the indicator on the 3-day, there's still not enough data to really show where we are. So we needed to go into the macro and look on the hour and the micro and look on the hour and the daily. And as you guys can see, even on the daily, there's not enough data on the RSI to really show us, you know, when we zoom out. So then we go into the hourly to see where we are. And right now we're sitting at 65 on the hourly. So we're closer to, you know, overbought than we are to oversold. So for me, it's not a good entry point, but long-term, I'm going to keep this project on my watch list, because look at the market cap right now. It's at $2.4 billion. If we go to Near Protocol right here and we click on market cap, we click on all, and where was Near Protocol when we were at $2.4 billion? Well, that was at the peak of that first wave 1 rally in April of 2021, when Near Protocol was at $2.3 billion. And then we saw a sell-off all the way down to $790 million. And so the price went upwards of almost, you know, $7 and then came all the way down to $1.60. That didn't mean Near was a bad project. That mean that it was drastically just overbought. It was hyped up. Everyone was talking about it. And then it saw a sell-off. Lots of people forgot about it. It was bought up at $1.60, and then it flew all the way to $20. And so I do think that this chart right here for Celestia, for TIA, if we go on the 3-day right here, is doing something similar for the first bull run right here as Near Protocol. And I do think it will do very, very well. So in terms of entry point, you just wait for everyone to forget about the project, and then you back up the truck for wave 2, and we'll be bringing this up in later videos. So that's something to keep on your radar. Now, don't let the Bitcoin ETF PSYOP distract you. Avalanche as well too is doing the same bullish setup as it did in September of 2021. It did a pullback right before it rallied to $140. And so when we look at Avalanche's chart right here, this is a wave 4 pullback in this micro Elliott wave 5, which is a macro Elliott wave 1 before Elliott wave 2 for the ABC correction going into Bitcoin's halving and the Federal Reserve lowering interest rates in March. Okay, so this is what we're looking for on Avalanche. And we saw this happen right here. It pulled back from like $76 all the way down to $50, then popped all the way upwards of $140. So I don't think we're gonna pass the all-time high with the ETF news alone, because a lot of that is priced in since October, right? Anyone that says the ETF news is not priced in is ignorant, guys. It's been a lot of it's been priced in based on the rumors alone, because where's this money coming from, right? The Federal Reserve is on the verge of lowering interest rates. They've been paused, but yet the markets are rallying. So crypto's moving completely independent from the macro market outlook of the economy imploding and there being a crash here soon, because there's some ETFs on the horizon. So going from $8 upwards of $50 of money flowing into crypto, you know, is a lot of speculation, a lot of rumors on this. And so with the ETF approval, I think this would be wave number 5 in this micro Elliott wave. And then we see an ABC corrective wave on the other side going into Bitcoin's halving. And then we work our way out of here for impulsive wave number 3, going to past the all-time high at the end of 2024. Then in 2025, we see another ABC corrective wave. And then we work our way out of here for wave number 5 by the end of 2025. So Avalanche's chart, you know, will look something like this. And then I think we could peak out anywhere of $400 to $600 for Avalanche. I mean, if we were to draw from the all-time high of Avalanche to the low, you know, 4.236 would be $620. A 3.618 would be roughly $500. A 2.618 would be $380, and a 1.618 would be about $230 for Avalanche. No guarantee that that's going to happen. This is just based on Fibonacci retracement. So if we were to do anywhere from a 1.618 for Avalanche to a 4.236, that'd be 500% to a 1500%. So a 5 to a 15x for Avalanche in the works leading into 2025 if we don't go into, some sort of doomsday scenario, economic depression, and the Fed breaks everything, and then we just see this happen. I don't think that's going to happen, guys. I do think that crypto is the new stock market. I do think that institutions are getting ready to dump a lot of money in on the macro, and I do think the payment rails for the banking, for payment processors, for SWIFT, for the IMF, for the World Bank, for the Federal Reserve, for the Bank for International Settlements, they're all getting ready for this. We've been talking about this for years, and you guys are prepared by backing up your truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology is going up in interest. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. I'll see you guys on the next video. I'll see you on bullrunners.com as well. If you want to discover our top altcoin picks first before these videos get released and get early bird access to our financial education platform when that's ready with no previous crypto trading experience, all you need to do, go to bullrunners.com. The link will be in the description below next to all of our socials and our Telegram group. You click the button, you put in your best email address, you'll get instant access to our Telegram group for free. You'll also receive breaking news updates first when they come out, because we like to give you the best to help you prepare for the worst that's yet to come in this economy. So, as always, guys, stay blessed and stay bullish. Let's run it.